So tax paid, we have to do a working for it. So have an outside working. Have an outside working. You call it taxation. Call it taxation. Call it taxation. Call it taxation. This is August 2022, in case someone was not there. Last sitting. Question number 3. So tax paid, check non-current liabilities. Under non-current liabilities, are you seeing deferred tax? You're seeing deferred tax, eh? Under current liabilities, are you seeing current tax? Yes. So what you do, we want to know how much was the tax obligation at the beginning. Obligation ile. So you say balance brought down. Balance brought down. So deferred at the beginning. Beginning is 2020. How much?
1,000.
Beginning deferred is 1,000. What about current? You combine the two of them.
16. So 24.
Current is 24. Yes. Meaning, when we started the year, the total tax obligation was how much? 34. Then for the year, you earned tax for the year, and tax for the year. For the year, check profit account, P&L. Profit and loss account. In the P&L, how much are you seeing as income tax?
100.
100, but you see it is positive. They have written net income tax credits. So income tax credits should reduce the tax liability. Sure. That's why you see the P&L has been added instead of subtracted. So tax credit of 100. So the tax credit should reduce the liability. Therefore, expected tax obligation is at what? 33, correct. So if these people have not paid, then tax obligation should be standing at how much? 33. Can you skip one line? Skip one line. Skip one line. Balance carried down. Balance carried down. Check deferred at the end and current at the end. So deferred at the end was 400. Current at the end is how much? 200. So the closing tax obligation is 600. So the decrease, tax liability has decreased. The liability was supposed to be 33, but at the end of the year, we are being informed that it is how much? 6. So the decrease in liability is the tax done what? Paid. Tax paid, the balancing figure. The balancing figure. How much is that? 2,700. So this is 2,700. That is what we were not being given by the examiner. Understood? So take it back to the cash flow. So take it back to cash flow. So cash flow, you say tax paid. Ile compute tulipata ngapi? What was the answer in tulipata?
Cash generated from operation.
Yes, cash generated from operation was?
-55.60.
Oh, early morning there is something that I came to realize. Huh? Hey, please hold on. There was amortization of grants. Hebu angalia kwa adjustments. Where we wrote adjust for. Hapo kwa cash flow. Unaona hapo adjust for. In the cash flow. Sarah, adjust for. Are you seeing amortization of grants? Of 500. Yes. So early morning there's something I realized to refine which is not right on that 500. You added. So you know when you amortize a grant is not our money. It's government what? money. So if it loses value, you know you will refund. You will refund less what? 500. So loss in value of a grant is input like an income on our side. You see that grant was recognized here as a liability. Ukiangalia grant, it was recognized in non-current liabilities and current what? Liabilities. So if a liability goes down, decrease in liabilities and income on our side. So the amortization of grant, when the grant loses value, it is a loss to the government, but it's an income on our side. So that income should not be added instead. It's supposed to be done what? Subtracted. So we added, which was wrong. So can you subtract that grant of 500 kindly? That was a mistake. So can you make rectification? Mpaka Sarah pale mnaandika cash generated from operations. Mlipata 47? 4560. So rectify for me that 4560. Rectify for me this. If you put the 500 in bracket, work, Abigail, Bishar, Elijah, Jemima, Dorothy, make that adjustment. Only just make adjustment on the 500, make a negative, then just work everything. Instead of 4560, you will have 55. That one will be. I used to put out a card. What? 44. So instead of plus, it's minus. No, I'll tell one. So, nani amerekebisha? If you put the grant in bracket, grant is an income on our side, but it's not an operating income, so we subtract. People say if you rectify, napata negative 55, 60. Yeah, so it comes to 55, 60. Sawa? Na zinapenda when unaandika hizo totals. Unafaa uandaline ukiandika totals. So ukiandika total ni gani? Make sure you underline where you are putting the totals. So tax paid we have gotten 20 what? 27. So 55, 60 minus 27. So operations ends there. So that minus 27, what do you get? 82, 60 negative. Call it A. Take it on the second column. There were two columns. So the total, put it on the second column. So we are done with operations. We want to go to investing. So right there, investing activities. Cash generated from operations. Operations. Yes, cash generated from operations. Cash flow from operating activities is only into 260, but we shall have a professional problem. Then bring investing activities. Investing activities. Investing activities When you want to work investing activities in cash flow, and listen to this, you go to non-current assets. Investing is all about non-current what? Assets. We invest in non-current assets. So when you want to work out investing, go to non-current assets, you reconcile everything there. So, to end up, let's go to non-current assets. All of them. So all of them are kamoja. There is only one. Property, plant, and what? Equipment. So property, plant, and equipment, just check two things, always in any cash flow. For PP, you check two items. How much did you receive when you disposed? And how much did you pay to acquire? So examiner will always give you one, then the other one you will work out. So once you see PP in cash flow, you come here and say, cash paid to acquire. No. Okay, let me start with this. Cash received. Received on disposal of PP. Then you'll also give us cash paid to acquire PPE, property, plant, and equipment. Those two must be there in any cash flow. So they will give you one, then they deny you the other one. So how will you get the other one? You will prepare a PP account. You reconcile them to a pattern. Check additional information number 2. Check additional information number 2. Check additional. So in note number 2, during the year, Costa sold its factory at a fair value of how much? 24. The factory is part of PPE, so they sold it for 24. So bring here 24. I know hiyo ingine hawezi kupea. So let's have a working for PPE. So I have working there for property, plant, and equipment. Property, plant, and equipment. Property, plant, and equipment. So balance brought down. How much was the PP at the start? You can work with the cost. The cost of PP was 5,400 when we started. So what we want to do, we want to check how these people went all the way to 42. So you go to the notes, you pick one by one. Note 1, interest has nothing to do with PPE. During the year, Costa sold an inventory for its fair value, a factory, at its fair value of 24. At the date of sale, its carrying amount was 14, based on a previous revaluation of 17,200. So that was the cost. The revalued amount is like the cost. So less disposal. Disposal was 17,200. When you revalue asset, the revalued amount is what you consider. Go to note 3. Plant acquired under finance lease during the year was for 3. So add lease. There were some plants which were acquired through lease worth 3. You add. Correct? Other purchases during the year qualified for a government grant of 19. And there are some assets which you were given what? Grant worth 19. Amortization, no, the insurance cushion. So these are the adjustments which you are supposed to make in relation to PPE. We started with 50, we disposed an item which had been revalued to 17. There's another one which came through lease. There's another one to recover through a grant. So in total, we should be talking of 38, 100. Skip one line. Is that the cost the examiner is talking of at the end of the year? Balance carried down. Is that what they're talking about? No. They are talking about how much? They are talking about 40, 42. So there is a decrease. A decrease or an increase? Increase. There is an increase from 38 to 42. Increase in the value of PPE simply means there was what? Yes, purchase, acquisition. That is what they don't want to tell you direct. They are taking you in circles. So the increase of how much? 3900. So the increase of 39 is what they acquire. And they don't acquire by switch talking those people, they pay. Sure. So go back to your cash flow. Under cash paid to acquire PPE, 3900. 3900 make it to be negative. So 3900 negative. Is there anything other than current assets? No. So investing is all about non-current assets. So give me 24 minus 39. 20. 100. Bring it here. Call it B. Call it B. Call it B. Then we go to financing. Financing activities. Financing activities, you go to equity and liabilities. That is what you reconcile. When you want to do financing in cash flow, you concentrate on equity and liabilities. Kindly take notes. So financing, equity, equity. Let's go to equity. You check those items one by one without a blink of what? Pass. So the first item under equity, ordinary share capital. Ordinary share capital in cash flow, we normally check, did this company issue shares? And if they issue shares, they don't give them for free, they give them for cash. So you bring here. So in fact, where are cash on issue of new shares. How will you know that these people gave shares? Because I don't want to straight, they will take you in circles. Check the opening value of shares. Opening value of shares was how much? So 12. Closing 12. They gave nothing. So it's 12 minus 12. But if there was increase, if it was 12, then this one is 13. Then the difference is what they gave, which you bring here as cash inflow. So nothing. Go to the next item. Go to the next item. Go to the next item. Next item is retained what? Yes, retained profit. In cash flow, retained profit is utilized, yes, to determine dividends. You know, should profit go down, profit ikiteremka, without communication, it means those people have paid what? Dividends. So when you are doing cash flow, any cash flow, you utilize retained earnings to assess whether these people paid what? Dividends. So we write here, dividends paid, dividends paid. Then we go and do a working for retained earnings account. Retained earnings account. So balance brought down. How much was the retained earnings at the beginning? 32. What about profit for the year? Earned profit for the year. So check P&L. 200. I hope you have seen the P&L up there. Then ninge add up na compare na closing. But this question has an issue. Unaona hiyo? Hebu soma the last bit of note 2. The last bit of note 2. The surplus on the revaluation related entirely to the factory. Na si factory iliuzwa. Si factory iliuzwa. So if there is surplus, revaluation surplus on asset which has been sold, then that revaluation has been realized. You know, when you revalue your asset, unaita value. Hii asset yangu imeongeza value by how much? 50. Kama your asset inauzwa, then you ignore revaluation and cash flow because hakuna pesa umepata. But if you revalue, then you sell that asset, then you realize that revaluation. So check hapo chini ya retained earnings in the balance sheet. Chini ya retained earnings, are you seeing revaluation reserve? At the beginning, it was how much? At the end, 0. Because it related to an asset which has been done what? Disposed. So we realized, they realized that. So the profit should go up. So revaluation realized. They realized 17. So it means our total profit for the year should be 32 plus 2 plus 17. But if that asset was not sold, usilete revaluation hapo. So you only bring when that asset has been sold. So umepata hiyo pesa. What do you get? 51. So this one is 51. Skip one line. The decrease is dividends. Decrease. So balance carried down. How much? Umetuweka 0 1. So these people never paid dividends. There is no decrease. And that is what I was looking for. So there was, if at all here was 4,000, then the decrease from 51 to 4 is the dividends. But here there is no immediately. So they never paid dividends. Weka hapa, nothing. They are putting us with things which are nothing. Next. Mambo ya equity imeisha, si ndio?
Yeah.
Tuteremke kwa liabilities. The first liability you are seeing is finance what? Finance lease. Finance lease in any cash flow, ukiona tu finance lease, andikanga lease repayment. Inakwanga tu lease repayment. All of them. You will always get lease repayment. Lazima. So you write lease repayment. Lease repayment. So lease repayment, let's have a working. Let's have a working for lease. Balance brought down. Check. List all the questions I've ever seen in a list zinakuanga mbili. Non-current and current. Can you check ours? There is non-current and also there is current. So combine all of them at the beginning. So lease obligation at the beginning, non-current was 34. Current 16, 16, giving you 5. I hope you are seeing where everything is coming from. Then, nataka uangalie note 3. Check note 3 during the year. Plants acquired under finance lease during the year was 3. See, ilikuwa beginning. Then as the year was going on, we negotiated for another lease. So there was, for the year, there is a plant which was acquired through lease. What, how much? 3. So total lease obligation should be how much? 8. Skip one line. If we add the closing and we get 8, then there is nothing which was paid. So balance current down, add closing. Here, lease non-current 4. Current 4 plus 18. So it dropped. It dropped from 8 to 58. So if an obligation drops, it means what has happened? Yeah, payment. There is payment. Balance in figure. They paid how much? 22. They paid 22. So that is what they are hiding from Alliance people, isn't it? We know how to get it. So lease repayment is how much? Go to the second item. Hapo kwa unacheza tu hapo kwa liabilities. There is 10% what? Debentures. Debenture kwanza lazima ujue ni loan. So at the beginning 0. At the end 16. So what happened? So they acquired. And if you acquire, si ni pesa umepata. So cash on issue of 10% what? Debentures. How much? 16. Don't check it in terms of loanability. Check it in terms of cashability. Yes, don't check at loan, now that's a liability negative. No, we got money. Yes. After that, 12% bank loan. How much was the loan at the start? 8. At the end of the period, Nothing. What has happened? We paid. Loan repayment. Loan repayment, 8. Toa. Next, deferred tax tulimalizana kitambo. Government grants tulimaliza. Payables tulimaliza. Government tulimaliza. Lease tulimaliza. Current tax tulimaliza. Bank overdraft usiguze, hizo ndio zinakuwa balancing figures. Cash, bank, wachana nayo. So we are done. Ukishamaliza, sikiza, ukishamaliza equity, actually inakuwa equity and non-current liabilities. The only thing I want you to bring here is interest. Interest, you can put it anywhere. But me, I feel interest should be here because we pay interest because of the loan. So the negative cash flow in financing. So bring here interest paid. Go to P&L and check interest. In P&L, there is interest payable of 520. Na hapo juu yake kuna interest receivable of how much? 80. So you are paying 520 and you're receiving 80. So the net paid is 520 minus what? 80. So we are paying how much? 440. Correct. We are done, by the way. Can you give me financing? That what? Negative.
Yeah.
Call it C. So I want you to give me net cash flow. So net cash flow is A plus B plus what? C. Unifanyia hiyo? Positive, negative. Positive 28. Haya. Sasa kitu fani na cash flow inakuwa na answer hapo ndani. So kama uko wrong tunajua. So you write here cash and cash equivalents brought down. So cash and cash equivalents brought down, you check cash in hand or bank and bank overdraft. But bank overdraft is a negative cash equivalent. So how much was the, go to current assets. Are you seeing cash at bank? At the beginning, cash at bank was how much? 0. How much was overdraft? Overdraft is negative. How much was the overdraft at the beginning? 11. So 0 minus 11. Overdraft, you subtract. So this is negative what? 11. So if you take this minus this, you will get cash and cash equivalents, then what? Carried down. So carried down, so this is where you know whether it is correct. If you take bank minus overdraft, what you get should give you this minus this. So, Wacha tufanye ndio uone. What is the cash at bank at the end? 17. Overdraft at the end? 0. 17 minus 0? 17. 28 minus 11? 17. So you may reconcile. Umeelewa? When you take this minus this, it should give you the figure you get when you take this minus this, which is coming to how much? 17. So it has reconciled. Umeelewa Mary? So ile tulikuwa naniuliza working backwards. I tell my students, make sure umemaliza na hii because they mark. Finish because this one you know. Sometimes in exam ukifanya A plus B plus C, hapo instead of reading umepata 1. There's no way 1 minus this can give you this. So don't interfere with these correct answers. So just finish with this, then you work backwards. You say x minus 11 is equal to 17. What is x? Utapata nini? 28. Atajipanga huko ndani kupata vitu zingine. Umeelewa? So make sure you finish with the correct answers. These two are marked, so don't leave these free ticks because you have gotten wrong A plus B plus C. Yeah.
1700 was bank. When they got a bank, messy cash. Yeah, you to bank.
Bado ni sawa. Bank cash enough, yes. Now listen again. There are some questions in your past paper for cash flow. Don't bother with them. Because the cash flow before new syllabus was cash flow for group accounts. Hiyo imetolewa. Side new syllabus, we are doing cash flow for published. So this is the only question they have examined under published cash flow. And also, if they fail to bring published, which we have just done, they will bring cash flow again. So we don't have any other. Hizo zingine ziko hapo si published. Hizo ni la group wachane nayo. So I've shared with you a certain handout there. Can you read question 1? Read question 1. Wow. Alright, so that profit after tax ni mbaya. The profit after tax should be note number 8. They have given you profit after tax of 8. It should be 9. Rectify it to 9. Mary, note number 8. Number 7. Nasema zote hata sometimes inaweza kuwa 0 ikiwa overdraft peke yake. Acha uone. Haya, so nyinyi mmesoma. There are some workings I want us to do. Like number 1, can we do a working for land and buildings? Have a working for land and buildings. Have a working for land and buildings. So land and buildings, what was the balance brought down? This is the first item in our trial balance. 55, eh? So land and buildings was 55. Check note number 1. Additional information number 1. Land and buildings were revalued upwards by 10. And revaluation gain 10. In addition, an acquisition of land and buildings of 40 was made. So add acquisition of 40. Meaning land and buildings at the end should be how much? 105. Skip one line. Examiner is saying balance carried down is how much? 95. So what do you think? Correct. There is depreciation which they are not communicating on buildings. Depreciation, the BF, the balancing figure. There is depreciation. That is what they were not telling you. Of how much? Of 10. That is what they were not telling you.
So when we acquire
See, to the asset account you add, but cash flow at all. See, cash flow is the person I talk. Let's check note 2. Depreciation on motor vehicle amounting to this was provided in the profit and loss account. Motor vehicle having a net book value of 8 was sold at a profit of 3. So let's reconcile motor vehicle account. Let's reconcile motor vehicle account. Motor vehicle account, balance brought down 35. Note number 2, depreciation, you less depreciation of how much? 4. less disposal. They disposed. Disposal, how much? A net book value of 8. 8. The net book value was 8. Wakauza 3. Yes. So it means the closing value of motor vehicle should be how much? 23. So yeah, it should be 23. Skip one line. Balance carried down. Balance carried down. 46. Why the increase? It's in acquisition. Acquisition. That is what they are not telling you. Of how much? 23. That is what they don't want to say in our woman. Then they say they sold an asset with a value of 8, then they gained 3. So how much did they receive? Cash on disposal is 8 plus what? 3. The book value was 8, but they said when they disposed, they gained 3. So they received how much? They received 11. We may need it. Then, what else will I really need? Dividends. Those ones can come on the job. Right? So can we start? In case somebody missed, I said number 7. The profit after tax for the year amounted to 9, not 8. 9. So I hope you are done with this. We want to start presentation. So you write there, Bongo Limited. Statement of cash flow. For the year ended 31st March 2019. So, operating activities. Operating activities, we start with which profit? Profit before tax. Profit before tax. Three. Three what? 3 plus. So you had back. So after tax was 9. So you take 9, then you cross back. Tax was 6. So you add back 6. You get how much? 15. Where can you? Adjust for Adjust for what? Huh? Depreciation. Adjust for depreciation. So depreciation on buildings, we did a working. Check your working one. We have gotten a depreciation of how much? 10. On motor vehicles, that one we were given straight. It was how much? 4. 4. Then check for me furniture and fixtures under balance sheet. Tell me what is happening there. So the decrease from 28 to 25, depreciation of how much? 3. Add all that, 17. There is no amortization, there is no impairment. So check whether we gained or we lost on disposal of any asset. Yes, there was a gain on disposal of motor vehicle by 3,000. So no. So gain on disposal, we add or we less? We add or we less? We subtract. Gain on disposal is not an operating income. It is not an operating income, so you subtract. Gain on disposal is not an operating income, so you less. After that, you check if there is any expense which was charged to P&L, which is not administrative, not cost of sales, not distribution. So you know here we are not given the P&L, but you can check from the notes. Is there any expense which was charged to P&L which is not operating? Operating is admin, distribution, and that one. Which one? Yes, yes, note 4. Check note 4. Interest expense charged to P&L for the year amounted to how much? 8. So interest expense, which is the finance cost, how much? 8. You add back because they are subtracted, but it's not an operating expense. Mashika here. Then there is nothing else they charge. Sure. So adjust from 15. You give me cash flow before working capital. That's what changes. Cash flow before working capital changes. So add from 15, ukiteremka chini. Unajua tunawacha muendelee na working capital. Umeendelea? Oh, then sasa nyinyi watoto wazuri. Hii mmeweka ngapi? Changes. 37. Working capital. Ayo, mmezipanga. Inventory ni increase ama decrease? So increase in inventory. Ngapi? 8. From 20 to 8. We have less. With less. Increase in stock means you are buying, eh? Kwa nikawacha peke yenu mnakuwa wazuri. Then receivables decrease. So decrease in receivables, how much? 2. You add, you less? You add. Una collect madeni. Decrease in prepayment. How much? 2. Pia una add. Bank wachana nayo. Enda kwa payables. Creditors, Increase in payables. Payables has increased by how much? 8. You add, you less? You add. Increase in payables means that will be madeni. Ukitishwa pesa unasema, no problem. Ulisaka sala, nilimlipa yake ya, nilimkopanga 208 na nililipa juzi. So you have the money but you are not paying. Interest enda kwa financing. Interest will go to financing. Inaisha kwa hapo. So yote cash generated from operations. 41. Positive. Online kuna mtu ana issue up to there. Na hiyo tax, unajua hiyo tax unasema tax paid. Ndio tuchukue the way it is. 6, ndio. Tax paid they gave us 30 what? 35. Call it. Yeah. Ndio kwa. Ikoje? You are ready to go. Sijui kama online wamefanya. Wacha nisikie. Abi, Vishal, Dorothy, Elijah, Jemima, Muli. Mko sawa hapa? I want to change the camera. Kuna watu wengine wako hapa wanajifanya ati wako mbele. So Abigail is okay. Hao wengine, can I change the camera? Sawa. Hata basi nyinyi ni wazuri. Na supporters wa Arsenal. Yeah, supporters wa Arsenal sasa wasikiki. They're on top of the table. Yeah. Investing. Watu wanapenda class mpaka Saturday jioni au watu wa Skiza. Investing, you go to non-current assets, you check acquisition and disposals. So, let's catch them one by one. For your land and buildings was acquired. So, acquisition of land and buildings, so cash paid to acquire. Land, it was land.
Yeah.
How much?
40.
40. Cash out. But hatukuuza land. Sindio? Motor vehicle was sold. So cash received on sale of MV. It was sold for 11. Sindio? It was sold for 11. And also, that is cash in. And also motor vehicle, check our reconciliation of motor vehicle. There was also acquisition. Acquisition of motor vehicle. It was 23. Please check where the figures are coming from. How much? Negative? Thousands. B. Let's go to financing. You over there. You got it right way. Yes, right the way you feel right. Financing activities. We go to equity. Sendio? Tuteremke kwa equity. So in equity, are you seeing ordinary share capital? Andika hivi, then we do a reconciliation. Cash received on issue of what? New shares. Let's do ordinary share capital account. How about working outside? Balance brought down. Check ordinary plus share premium. Ordinary plus share premium. Familia moja. 50 plus 15, giving you 60 what? 65. There was a note. Note number 3. Check note 3. Note 3, they say bonus shares of 20 were issued at par during the year by utilizing. So bonus. You know bonus, shares will go up, lakini hakuna pesa, they are for free. So top up with 20. So this is 80 what? 85. Skip one line. If closing tallies with 85, then there is no shares they gave. So check closing. Closing is what plus what? 80 plus. That is 100. That is 100. It has gone up, eh? So that increase they issued. So issue, how much? 15. So how much? 15. Let up is positive. Then after that revaluation hakuna pesa mtu anapata. Si ndio? Ignore. Unless hiyo asset iliuzwa, ikiuzwa you realize unapeleka kwa retained earnings. Retained earnings you should use that to get dividends. But already hata tumepewa. Iko wapi hiyo total dividends? Note number 6, total dividends for the year amounted to how much? 5. Hiyo ni for the year. Na pia kuna proposed. Lakini hawaketupea hiyo bado tungepata. If we were not given, take your calculator. If they would have not given us that dividend for the year, you use retained earnings, which you take 15. Opening retained earnings is 15. Can you capture in your calculator? 15 plus profit for the year. Profit for the year number 7. Note 7 was 8. According to how they had put, ilikuwa problem on their side. They put to me here 8 minus the closing. Sindio walikuwa napata hiyo dividend ya ngapi? 5, yes. Sindio hiyo dividend for the year. So if there is no proposed, then what you get is what has been paid. But here there was proposed. Beginning proposed was how much? 4. You know proposed means not yet paid. So to get dividends paid, this is what you do. You don't even have to do that one in outside. So you say dividends paid. The class coming after this is again cash flow. Now you can section 5. Very dangerous. Yes, up to 8. You can. Work is 28. You don't care. It's Nairobi. Dividends paid, you do this way. How much was proposed at the beginning? They proposed 4. During the year, dividends for the year. How much? 5. So it means the total dividend should be 9. But proposed at the end, which has not been paid, 3. So those people paid how much? 6. Well, they paid 6.
One.
Which one?
4 minus 3.
So,
Opening.
get the difference when you talk about. Alright, next item, after retained earnings, go to non-current liabilities. Non-current liabilities are using 10% debentures. Debenture was how much at the beginning? 20 to 30. So cash on issue of debentures. How much? 10. Positive. That is cash inflow. Then bank loan. Loan was how much at the beginning?
10.
Loan was 10. 10, yes. Then loan went to 6. So they paid 4. Loan repayment. It reduced from 10 to 6. Those people paid 4. More. Ukimaliza unaangalia interest. Ukimaliza non-current liabilities and equity, check interest. Are you seeing interest? Interest, there is payable. Eh? So you come here and say interest paid Payable at the beginning was how much? You know, payable means not yet paid. Under current liabilities. Are you seeing 6? During the year, how much was charged? We were charged how much for the year? It was in a certain note. What number? 4. Interest expense charged during the year was 8. Meaning total interest should be 14. But wakasema payable means outstanding at the end. How much? 9. So they paid how much? 5. They paid 5. Yes. Tusha, umemaliza. Give me the total for financing. Once you're done with equity and current liabilities, look for interest. Maybe my love. How much? Get the aggregate, chop. Time is dangerous for us. How much? Yeah?
10.
Positive. Positive 10. Call it C. Give me the net cash flow. A plus B plus C. 7,000. -7 bars. Kusema ukweli ameingia. Cash and cash what? Equivalents. So you say cash and cash equivalents at the beginning. What are you feeling now? Morning was the same.
Yeah.
All the time. It's not easy for the morning to be up with evening. Those people are working extra mile. Wako serious? Wewe umeona? Cash and cash equivalents brought down. Can you check bank balance and cash in hand? Kuna 3. Overdraft. Bank overdraft at the beginning is how much? 0. So you take bank is 3, overdraft is 0. Unapata? Positive, sindio? -7 plus +3 is negative. Sindio? So -4. So cash and cash equivalent at the end should give us 4. Bank is how much at the end? Bank and cash is 0 minus overdraft 4. 0 minus 4 minus 4. So that's reconcile. Yes. We shall overcome. Now, my time is running out. I'm starting another class at exactly 6. There are things I need to pass across. Number 1, question 2. Question 2, nawatumia solution right now. So I have a solution to that, so I'm forwarding to you. Then question 3, I don't have solution. You will do for yourselves, but I need to clarify something about it. I need to clarify something about question 3. So in question 3, let's read additional information of question 3. There was no disposal of non-current assets. Shillings 10 million of the 10% was redeemed. During the year, dividend of 17 was proposed. Taxation for the year was agreed at 15. Cash flow. So in that question, you are not given profit anywhere. So I'm afraid you can be given a question without profits. So Adam, class yenu haijafika, toka kidogo. Class yenu inaanza 6. Adam, class starts at 6 in section 3. Just give us a few minutes, then you log back at 6. Kindly. Unaweza watch mpira.
Alafu windy day.
County day ni nini? County day ni gani?
I was in guess I. So I was saying, I'm afraid you can be given a question where there is no profit at all. You know, this one we have done, you are given net profit, so we are working backwards. But you can be given a question where there is no profit. If you're not given profit, so listen to this. If you are not given profit, then this is what you do. We're not retained earnings. Check retained earnings under equity. Mumeiona? Yes. You start with the retained earnings brought down. So retained earnings brought down was how much? You take 53,500 less expenses. So expenses, mark them. We're on number 3, dividends. So you less what? You don't get dividends like when you propose to subtract. So less dividends of 17. Then there is taxation. Taxation of how much? 15. So you get what it is supposed to be. So you take this minus this minus this. Then you compare with the closing. You compare with the closing retained earnings. The difference is interest. So, yes. The difference is profit. Profit, not interest. So you take this minus this minus this. Then you compare with the closing retained earnings. The difference is the profit. Now your profit umepata inakuwa profit after tax. So then that profit after tax, you add back tax to get profit before tax. Then you kick off. So yes, so in that question, there is no profit. So you take this tax, then you compare with the closing, then you get it.
So if you have the tax, you have the tax for the closing.
Yes.
The taxation for the
Yes, you add it.
So the taxation and the current liability, whatever.
Are you able to reconcile to baadaye ukifanya for taxation? So can I forward for you solution to question 2? Wapi?
So after you less dividends and tax,
You compare with the closing.
compare with retain, so niangalie hapa kwa that one, sio? Then what next? But si hazita fanana kuzizi start so
Itafanana. Ena tu ufanye utaona. Itafanana. So I've shared with you the solution to that question. Question 2, you can attempt. So, niandike hapo branch accounting. Branch accounting. Branch accounting is our second last topic in FI. So my program, the remaining 2 Saturdays, next week and the other week, I will combine all the classes to Tafanya from the back, ratios, accounting for ratios. We have branch and ratios. So those 2 Saturdays we do ratios, then normal class tunafanya branch. That's what I na closing ni ngapi?
closing ilikuwa 31.
See, increase from 21 to 31 is the profit.
So that's the profit.
Yes. Money after tax.
Profit after tax.
Yeah, the net. So thank you so much online. You can log out, then all shall be well. Thank you.